Welcome back. So we are prepping for a good start. Let's get the implied open back up on the screen. It's choosing to be on the green side, though Asia's a little mixed, but yeah, there we go. Another 90 points higher. That's what the indication is. So let's see. It's bulls in total control. Our team is standing by with the CNBC-TV18 list of top stocks to watch. So let's get started with IOB. Guys, morning to all of you. Sudarshan, why are you watching out for this one?
Morning, Surbi. So IOB yesterday has disclosed to exchanges that it has launched QIP, and for that floor price, that company has fixed floor prices normally as per the SEBI formula. So it is 42.70 per share, and total size of the QIP is of up to 2,000 crore rupees. And of this, base size is rupees 1,000 crore, and upsize option is of rupees 1,000 crore. And deal size is of up to 49.3 crore shares, forming 2.6% equity. Now, the important part is indicative price, which is 40.57 per share, more than 7% discount to yesterday's closing price. That's the reason I'm going with red, because discount level is very high for the QIP that IOB has launched.
All right, Masood, thank you very much for that. So, once again, I mean, a QIP secondary market transaction starting to open up as the market is looking a little better. Well, let's talk about Paytm. The stock, of course, has been performing for the last 2 days. Day before was the big move. Yesterday, the stock ended about 3% higher. Vinny is here with more. Vinny, morning.
Hi, morning. So today maybe we could see some bit of a red coming in on the screen. Yesterday the cabinet actually approved some extension of incentives for UPI transactions of up to 2,000 rupees. This is specifically for those small merchants bankers from 1st of April 2025. Now, Jefferies has come out with a note. They've given a whole rating target price of 850 rupees per Paytm. Now, what's the concern is that the incentives are half of the incentives, the value is half of that was of what was given last year. This time it's 1,500 crore rupees. What this means is that incentives now will fall. The benefit that the companies would get would fall from 20 basis point to just 6 basis point. And specifically for Paytm, if this is actually the figure that works out from 20 to 6 basis point as a benefit, then the adjusted EBITDA also could be 50% below estimates in FY25. In FY26 and 27, it would be lower by around 20 to 30%. This is the adjusted EBITDA I'm talking about. And profit before tax for FY25 would be lower and could be lower by 15%. Only one positive sign that we could watch out for, there were news flows coming in around MDR-based charges, that is merchant discount rate charges, which are currently not there for these bankers, Paytm currently. If that starts getting implied, then that could be a silver lining for Paytm. But as of now, red is what we could expect on the screen.
Right, red on Paytm. Let's see what happens on that one, Vinny. But Voltas is a stock that I'm watching out for. Yesterday, we had that conversation with Blue Star and PG Electroplast. Voltas held its analyst meet as well. The stock has been doing well. Over the last 1 month, is up 16% in a wobbly market, increased its gains. The key takeaway from the analyst meet is that the company will focus on profit expansion through value engineering versus a price hike. In fact, over the last 8 to 10 months, the air conditioning market has grown 30%, whereas company has grown upwards of 35%. So they've gained market share and they expect to continue to do that. Yes, production costs have gone up due to INR depreciation and rise in commodity prices. But the company on its part has not taken any meaningful price hikes. In fact, the industry has taken a price hike of 3 to 5%. Voltas hasn't. They've indicated that secondary sales ahead of the peak summer season on a very high base are fairly encouraging as well. And they continue to expect to grow ahead of the industry. Analysts are mixed on this one because Nomura has said they're neutral. We have CLSA, which has said after this outperformance, maybe they have a target price of 1375. Morgan Stanley still maintains its overweight rating. My sense is that because of the fact that the company intends to continue to gain market share and peak summer sales season being more encouraging, the stock, despite the outperformance, may continue to see some green.
Okay, all right. So Voltas is going to be on our radar as well. Let's go back to Sudarshan. Manappuram, today they're looking to raise some money. There's a board meeting today, Sudarshan.
So Manappuram stock has been in focus over the last few sessions. You would have seen that stock has been moving higher despite the stock was in F&O band. It's up 6% this month, up 14% in 2025, and nearly 7% away from the record high. Earlier this week, Manappuram had disclosed to exchanges that board will be meeting to consider fundraising proposals, and that board meeting is going to happen today, and board will be considering raising fund via both equity and debt. So what were the reports? Reports were that Bain Capital is likely going to acquire majority stake in the company, and the deal value was seen around $1 billion. On that report, company had clarified to exchanges on February 24, saying that it continues to evaluate proposals as it comes. So on the back of this and ahead of the board meet, I'm going with green for Manappuram Finance because it's important news, and also the stock has come out of the band today.
All right, that's Manappuram and expectations that we'll see the price and of course open offer, etc. I think all those things will be in focus. But stock's done well coming into this event over the last couple of weeks now. SBFC Finance is the next one we want to talk about. Vinny is here with details. Vinny.
Hi, morning. So SBFC, we're keeping an eye on this one. Now, the promoters, that is SBFC Holding Pte, has sold some stake in SBFC yesterday. This was through an open market transaction. It came in the bulk deal. 1.3% stake is what they've sold. That is around 1.36 crore shares. Value is around 112 crore rupees. SBFC Holdings, the promoter company, will be holding around 53.49% stake in the company after the stake sale. But what is interesting is that over the last few quarters also, they promoters have been reducing stake few percentage point, but they have been reducing. In March 2024, it was around 60%. Now, currently, obviously, after the stake sale, it will be at around 53.5%. So, interesting to watch out for SBFC Finance, and we're expecting red on the screen today.
Right, Vinny, thanks a lot for that. I'm looking at International Gemological Institute, IGI. Remember, the stock has been beaten out of shape. It's down 50% from its post-listing high, way below its IPO issue price at 417 as well. And the company's been meeting analysts over the last couple of trading sessions or couple of days itself. What they have said is that the demand for certified diamonds, gemstones and jewelry is expanding beyond traditional market. That was one of the key concerns, whether there is enough demand for, certification itself or not. And on the supply side, the market has a very high entry barrier. Beyond diamonds, they are saying the market is also witnessing a greater interest in colored stones and contemporary jewelry style certification. And the acquisition of Belgium and Netherlands business would give them about 25% additional revenue. They have 65% of the global market share of lab-grown certification as well, which will increase in penetration. So they, on their part, are, assuring the street that maybe the demand for certification will continue. The stock has seen a correction, so maybe opens in mild green. Thereafter, what really happens is what the expectations of the investors are on the overall demand itself for certification. So we'll keep an eye out on that one.
Okay, let's see if that, commentary can add to confidence in any way after the big fall that the stock has seen. Let's move on. There are a couple of other stocks also in news as well. Vivek is rounding them for us. Vivek, good morning.
Well, good morning. Quite a few stocks in focus. This is on the back of news flow. First on the list is Jyoti Structures. The company has given a year-end order book update. So the company currently sitting at an order book of over 1,800 crores. They say that the majority of the orders will be executed in the next 12 to 18 months. NCC, a good material order coming in for this particular company. The company has received an order from the Andhra Pradesh Capital Region Development Authority. The order size is close to 2,130 crore. And the order is for construction of roads as well as other allied activities. Now, the construction period of this particular order is 3 years. Just to give some perspective, at the end of Q3, remember the company received orders of close to 14,000 crore in YTD FY25, and the company had earlier given an order inflow guidance of close to 20,000 crore. So, company closer to its guided target. Now, the other stock on the radar is Indian Bank. The company today will be meeting. The board meeting is held to consider a proposal regarding fundraising. And lastly, keep an eye out for Antony Waste as well. Some relief coming in. The Bombay High Court has dismissed the Navi Mumbai Municipal Corporation's plea to set aside an arbitral award that was awarded towards or in favor of Antony Waste. Now, NMMC has gone ahead and deposited close to 20 crore rupees. This also includes the interest of the earlier arbitral award. So, some green expected on Antony Waste as well.
Okay, all right, got it. Thanks very much, Vivek, for that. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them are Voltas, Manappuram Finance, Jyoti Structures, NCC, Indian Bank, Antony Waste and IGI. The ones that have negative news around them are Paytm, Indian Overseas Bank and SBFC Finance. Okay, let's move on and talk about Ola as well. Ola Electric has now faced a fresh set of issues with the Ministry of Heavy Industry seeking details on sales data and some inspections as well. We have Parikshit joining in with more details. What's the latest, Parikshit?
Well, Ola seems to be facing questions at multiple levels. One, at the central level, the Ministry of Heavy Industries, which is the nodal body for PLI and also the PM E-Drive incentives, is now looking at the mismatch in data. That is what Ola Electric is claiming as 25,000 vehicles sold in the month of February versus 8,600 odd vehicles which are registered in the Vahan or the Ministry of Road Transport Highways registration portal. So they're seeking details from the company as to why there is a mismatch. Secondly, we have seen an order of the Maharashtra government and also by other RTOs in the country. There are inspections happening against Ola Electric at their stores across the country. In fact, in Maharashtra, over the last 2 days, there have been 36 locations where there have been inspections. And this has happened in Pune, this has happened in Mumbai, and close to 34 to 36 scooters have been seized also by the RTO. This is because the scooters are found without valid registration documents and these stores do not have valid trade certificates. A similar a probe inspection has happened in Jabalpur, where 6 or 7 scooters were inspected and a reply from Ola has been sought. We've also got to know that Ola Electric stores in Punjab were also shut down for not having valid fire certificates and trade certificates. We have sent detailed queries to Ola Electric on all of these issues. We are yet to get a formal reply from them.
All right, Parichay, thanks a lot for that. Ola, the news flow continues on a regular basis on that one. We'll keep an eye out on how that performs in trade today. But for all the roundup of the commodity market action overnight, Manisha joins in. Manisha, let me hazard a guess. Gold continues to glitter and yet another record high is what we saw there.
Oh, well, absolutely. And it's not even tiring at these levels. You know, the gold is trading at above $3,050 an ounce right now. This is after the U.S. Fed stayed put on rates as widely expected and indicating reducing borrowing costs by 0.5 percentage point by the end of this year. So the bull market is surging strongly, holding above 3,000, holding 3,050 as well. The geopolitical tension seems to be coming back and the fears of recession also are on the higher side. So there is one safe haven and you have to be invested, whatever size of your portfolio, within gold. But let me remind you, it's not just gold. Take a look at copper prices. 10-month highs onto this one. Inventories have continued to decline. Potential tariff concerns keeping this commodity also on the higher side. And very strong gains is what we are also working with in terms of aluminum and zinc because of supply disruptions. And again, as markets weave in the tariff percentages into this as well, all of these commodities in Asia are trading very, very strong right now.
Manisha, thank you very much for that. Thank you very much for taking us through all of that. We'll take a quick commercial break. Deepan Mehta of Elixir Equities is going to be with us in just a bit from now. We'll talk about individual names that Deepan is watching. We've had a nice rebound. Deepan, of course, has also been turning constructive for the last couple of occasions that we've had him. So that's coming up.